So Dave, I've been thinking a lot about mirror trading,
Mm.
and the route that was taken, essentially getting rubles out of Russia and then getting dollars offshore.
Yes.
And London as a market is has mechanisms that facilitate that, because we've got obviously a local listed market in Moscow.
Yep.
So you spend your rubles, you buy local stock.
That's right.
You go to the London market, you sell GDRs, global depository receipts, which are traded and denominated in US dollars.
That's right, yeah.
On those same stocks. And that gets you your dollars back. But of course, there's a lot of twists and turns on the way, right? Because you can't just sit, you need to close off those loops. You've got to get your money back for a start, because laundering, that's really what's important. You're just trying to transfer money. You're not really bothered too much about the actual stock trades. So just sort of operationally thinking about how does that local stock that you buy in Russia transform itself and get itself into being satisfying that global depository receipt position that you've just sold in London to get your cash, to get your dollars. How does that all work?
Relatively straightforward. So really with the operations team, we would see when the purchase is made of the equities, they would settle into somewhere, a correspondent bank in Moscow for the broker-dealer or the prime broker, whoever they be representing. Once that position is settled, somebody in the corporate actions department would perform a conversion. What they would do is they would instruct the local custodian in Moscow to deliver those equities, the local shares, to the conversion agent. It could be Bank of New York, it could be Citibank, one of the 4 sponsors of the depository receipt programs. The corporate actions team would then call them up, make sure the position has been delivered, complete the documentation, perhaps a QIB form to prove that the broker-dealer is compliant with that piece of legislation. They would then send instructions either to Euroclear, it could be Clearstream, or it may be DTC in the US, depending on the eligibility of the stock. They would then monitor receipts to come in. It could be done as quickly as T0. So if on the day that we have the position in Moscow, we could actively convert that into the GDRs or the ADRs on the same day in order to be sold out.
So they're checking that the position has been delivered in Moscow, first of all. I want to really break this down.
Absolutely.
And take this down so we really understand what's going on here. So you purchase your position in Moscow.
Yes.
Now, obviously that won't settle for a few days, right? You go into the market, you purchase.
Yes.
I can't remember what Moscow's on, but it's probably on T3 or T2 like most markets.
Yep.
So you're waiting for that stock to come in.
Yes.
If you're effecting a GDR sale in London on the same day, which you are, when you're doing, or in fact probably the same time, because essentially you're, if I think back to what the guys were doing, they were asking if there was enough volume to put through this transaction. So they were definitely lining up both sides at once, the Russian side and the London side. So you're doing that at the same time.
Yep.
So in terms of your delivery and so on, how does that work? Because you've got to effectively affect a creation of those GDRs, aren't you?
That's right.
How soon, if that stock won't come in until T3, but that's also the day that you've got to deliver your GDRs, right?
That's right. Yeah, that's right. I mean, there's a couple of options there, and as you say, ordinarily those two trades would be struck on the same day, the locals and the ADRs. So, as I say, we can either convert them on the day that they come in, but there's other options available as well. There could be a stock borrow on the ADRs or the GDRs. There used to be something called pre-release and pre-cancel.
So tell me about pre-release, because that's something I do remember when people back at Bearings or ING Bearings used to do a lot of Korean and Taiwanese GDR conversions, and they would talk about pre-release and so on. What is pre-release?
Okay, so what you can do, you can basically pay out collateral. So the bank, the broker-dealer or the prime broker would pay out collateral to the ADR agent, so Citibank, Bank of New York, JP Morgan, and in exchange for that collateral, you could either pre-release the ADRs, so on receipt of the agreed collateral figure, which would normally be in US dollars, you would put instructions in place against the depository in order for them to deliver to you the ADRs, or instead, if you wanted to, you could have them to pre-cancel. So it would work in the same way, except they would basically cancel those ADRs, so to speak, and deliver you the local shares. So you could receive local shares in somewhere like Russia, for example, without actually having the ADRs. All you've done is you've paid collateral to them, and in exchange they've either pre-released the ADRs or pre-cancelled the ADRs into Russia for you. So you've then got options as to how you can close out that position.
Okay, so I'm quite interested in this, because if I think about my route as a trader, so if I'm going to get my local stock into GDRs, then obviously I've purchased some stock, I own that physical local stock.
Yes.
I can enter into a conversion and I can have my GDRs created, which will satisfy delivery on what I've short sold.
That's right, closes you out.
But I might be edgy on that, because if something slips up or whatever, that might slow down the process. And I guess if I'm a launderer, what I don't want is, I don't want a tension on what I'm doing, because people start scrutinizing what I'm doing. That's when I'm going to get caught. So I don't want that to happen. So if I want to make sure things go hyper smoothly, I can essentially have that creation of the GDR happen, regardless of whether I've got the local stock or not, through the pre-release mechanism. And that's by my prime broker providing collateral to the conversion agent, Boney, etc.
Exactly.
Right. So I'm just thinking about that collateral that's being provided on my behalf. I'm wondering what the mechanism in there, because I'm obviously going to get charged for the use of that collateral, right? People don't do stuff for free, are they?
Exactly,
Right. And if I'm a launderer, I think I know I'm pretty price insensitive, aren't I?
Absolutely, yeah.
So one thing that audit teams could look at and could test for are where collateral teams are charging a customer abnormal amounts for collateral, because they're so price insensitive.
That's right.
And people are rewarded in the financial markets for creating an edge. And that sounds like a bit of an edge if you've got a customer that's very insensitive to something as low risk as the provision of collateral.
Yes.
Okay, so that's one route. And then the other route that it could be that I just simply go out and borrow those GDRs.
Absolutely.
I don't even have to go through all this. And actually, I think, Dave, does pre-release still happen?
No, it doesn't. In fact, it got withdrawn some time ago because of, around the pre-release and the pre-cancel, there was stipulations as to how long you could keep it open for. Because you've got that position open, you either have to close it out with the either ADRs or with the local shares, but those positions have been held up for so long. There was a lot of fines that came out from the US. I think it was from the SEC, and the pre-release and pre-cancel programs no longer exist. But certainly we were very active in those at the time at Deutsche Bank. We used them an awful lot, certainly on the proprietary trading side.
Okay, so maybe collateral is less of a flag nowadays, because, as we say, we think that pre-release mechanism is not in use anymore. So the other route is simply just to borrow GDRs.
Exactly, yes.
And again, I mean, I remember as a trader, stop borrow was one of those things that was really one of my lowest costs, because of the amount of time that I was running a short position for.
Of course,
because rates were generally somewhere between, I don't know, 50 basis points to maybe 4 or 5% per annum on what I was borrowing. Now, if you're running a position for a few days, that isn't going to cost very much at all, right? So again, thinking about that, if I'm prepared to pay egregious amounts for borrow, because it is such a minimal cost in the grand scheme of things, in absolute terms, and when I think about how much it costs to clean money as a launderer, then I can't see me being, again, very price sensitive to the cost of borrow. So that could be an area for control functions to do a bit of testing around how much people are paying for borrow.
Absolutely, especially now that rates have risen. Obviously, that's going to be costing more, and as you say, a launderer is going to be less sensitive to that cost that they're going to have to pay in an era when other people will be analysing what that's going to cost. So certainly, definitely a good point for control teams to look into.
Yeah, because I guess, with all of this stuff, with all of the mirror trading, it's actually not about the securities transactions. It's just about the transfer of money. And it's about exploiting those mechanisms in the market that enable you to receive your money.
That's right.
And that's what things like stop borrow, what collateral do. So they look like a good area for people to test.
Absolutely.
Thanks, Dave.
No problem.
Very educational.
Thank you, Nick.